Welcome back to this week's market update. Today is Friday, November 17th, 2023. Very busy week with a lot of inflationary data as well as an equity rally. So let's jump right in here. Heading into our market update this week, we saw stocks rally as investors anticipate a lot less hawkishness from the Fed upon a lot of lighter than expected inflationary data this week. As of close on Thursday, November 16th, the Nasdaq Composite ended 2.3% higher on the week, the S&P 500 about 2.1% higher on the week, and the Dow Jones Industrial Average up about 1.9% higher for the week. The biggest update of this week comes on the inflationary front, where we got both the CPI and PPI prints for the month of October. On an annual basis, the CPI print clocked in at just 3.2% here, as you can see, and the core CPI at just about 4%, right on the dot there. So they're both quite below expectations. And on a monthly basis, we saw CPI actually unchanged, flat on a month-over-month basis, while core CPI increased by just 0.2% from September, which were both also below estimates. Following this, the S&P 500 was up nearly 2% on Tuesday, driven by the anticipation that the Fed's official rate hiking pause may be soon a reality. Looking behind the cooler October CPI print, we saw energy prices cause a lot of the flat month-over-month change in overall headline prices, with a 2.5% decrease across the energy category, led by commodities such as gasoline that were down about 5% on a month-over-month basis. Also, on a month-over-month basis, we saw transportation services drive inflation higher at a monthly increase of 0.8%, so that was quite high there, but a cooler 0.3% on the shelter category. On an annualized basis, we saw the categories of shelter continue to be huge weights on the higher CPI, with a year-over-year inflation rate of 6.7% on shelter, and that includes both rents and owners' equivalent of rents. We also saw used cars and vehicles here, a annual decline of over 7%, so not a great time if you want to be selling your used car. Also, things like utilities, the gas services are down on a year-over-year basis over 15%. So lots of unique changes in the October CPI print, but definitely seeing some progress towards the Fed's 2% goal. Along with the consumer price index that we got for the month of October, we also got the PPI, the producer price index, and it similarly came in cooler than expected for October. On an annual basis, we saw the headline PPI come in at 1.3% for October, while core inflation came in at just 2.9%. And then it's even more shockingly low on a monthly basis. It actually fell 0.5% month over month in October on that headline inflation rate, while the core inflation rate rose just 0.1% in October. Kind of what drove that was, again, energy prices came down 6.5% to producers in just the month, while food prices also declined and trade costs also declined to producers. On the other hand, we saw a monthly increase of transportation and warehousing cost, which is really interesting given that energy prices have been down since August and transportation costs are up. But anyways, in any case, we are seeing cooler than expected inflation on both the producer side and the consumer side. So hopefully this trend continues and the Fed can back off of their quantitative tightening. Following October's lighter than expected inflationary readings, retail sales data similarly came in lighter than expected for last month. We saw October retail sales come in at a monthly decline of 0.1%. So this is the first negative month in quite a few months here, and that was mostly led by a drop in auto sales as well as a drop in general merchandise sales here. On an annual basis, we saw retail sales only up 1.6% from October of 2022. So really interesting here that we are kind of seeing moderating spending as we come into the holidays. So really, it could be a indication of weakened discretionary spending, even going into the holidays here, or it could be consumers kind of tightening their budgets a little bit more ahead of knowing that they're going to spend more during the holidays. So either way, we'll continue to watch the data. I think the November and December retail sales data will be pretty important in seeing how the consumer is acting even throughout the holiday season, but we'll continue to see and watch for any shifts. One final update of the week here, we have continuing claims data and a shift that we've seen pretty much since the beginning of this year in an increase of continuing claims as people stay on unemployment longer and the unemployment rate continues to tick up ever so slightly each month in recent months here. So we had an unemployment rate of 3.9%, which again is quite healthy for an economy. Typically, around 4% is quite healthy from the Fed's perspective and from a lot of economists' perspective. But as you can see here, the year over year percent change in continuing claims has been rising substantially and is up almost 30% compared to a year ago in terms of just continuing claims, people that are sticking on unemployment for longer periods of time. And here you can see kind of the negative 60 to 70% change year over year in claims that we saw throughout 2021 at this time period. And I think a lot of that was due to coming off of an extremely weak labor market during the pandemic, as many people were on unemployment. And some of this increase is attributable to just, normalization, but could also be attributed to a economic slowdown on the horizon. So we'll continue to watch it. Nothing is, super recessionary or of concern at this time, but we will continue to watch things like initial claims, continuing claims, and other labor market data as it comes out. That was it for this week's market update, and we appreciate you tuning in. We will see you in 2 weeks after the holiday break.